This is King World News. I'm Eric King, and you're about to hear our exclusive weekly metals wrap with Ted Butler. Gold closed over $1,000 an ounce and silver near the $17 level. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have legendary James Dines of the Dines Letter, David Tice, Chief Portfolio Strategist of the Federated Prudent Bear Fund, Bill Lagner, co-founder of Bearing Asset Management, whose fund returned over 100% in 2008, as well as Tom Dorsey, whose work is on so many firms' desks each day on Wall Street. Joining us now is Ted Butler. Ted, let's start off right away with the Commitment of Traders report, because it's getting rather extreme, is it not? And can you give the listeners an update on that?
Sure, Eric. Very extreme is an understatement. The report came out about a half hour, an hour ago, and we did have, as expected, market deterioration in both gold and silver, meaning that we had a tremendous increase in technical fund and speculative long positions and a corresponding and reciprocal increase in commercial short positions. In fact, in gold, even though it was expected in looking at the daily volumes, price changes, and the daily open interest changes, when you see the report, it kind of sets you back. It's not that it's a surprise, it's just that actually seeing the numbers does set you back. Basically, we increased this week in gold, by my memory, the largest increase that I recall in history. We increased over 54,000 contracts. That's the equivalent of 5.4 million ounces net change. Speculators added to longs, commercials added to shorts. We're at an all-time high in extreme in the commercial net short position in gold. In fact, this is as of Tuesday. You can almost add another, for sure, 20,000 contracts or 2 million ounces onto the gold total since Tuesday through today. Not saying that's what's going to be in the report next week. Depends upon what we do in the market on Monday and Tuesday before the next cutoff. But a just monumental and alarming increase in the gold net short position. Silver increased by a hefty 8,000 contracts, the equivalent of over 40 million ounces. Again, technical fund, speculator buying, commercial selling. What's so alarming about this is that it raises the stakes. I can't tell you for sure how this thing is going to be resolved. I can tell you with a fair degree of certainty that it's going to be resolved. I mean, this is an unnaturally large commercial net short position that has to be resolved one way or another. One way is they somehow rig the market down and slam it down $50, $60 plus in gold, a couple of dollars in silver, and force the speculators to sell. Or you could have a situation where the commercials basically have overcommitted themselves on the short side and don't have the wherewithal to contain the market, and it runs away from them on the upside in a panic. So you could have either situation right here. I'd classify it as a dangerous situation that I'm a little disappointed in the Commodity Commission in that they let it get so extreme. This is not good for the markets. It's not good for, orderly trading conditions. One point I'll throw out that, especially this week, in which Barrick Gold announced that they were going to try and eliminate and pull in most, if not all, of their hedge positions, that miners in general are not selling their production short like they've done in the past, and they're not hedging. So with miners not hedging, in fact, just the opposite in the case of Barrick, where they're buying back their hedges, you have to sit back and question, what the heck are these commercials selling? This can't represent bona fide hedging because there's no evidence in the real world that the short positions are as a result of minor additional hedge selling. So you'd have to classify these commercial short positions as purely speculative. And if that's the case, I'm doubly amazed that the Commodity Commission would allow them to increase their bets to the extent that they're at right now. And as I said, it's going to be resolved in a potentially disorderly manner. Which way, I can't tell you for sure.
I understand gold is at an all-time high in terms of the short position in history. Just on silver, though, very quickly, percentage on that. Can you give me a rough percentage?
Yeah, we're up to, Eric, I mean, we're past the 100% mark on gold, okay, but in silver we got to be up to the 65% mark, maybe 70% mark, so it's very extreme. Doesn't mean it has to be resolved on the downside. It always has been in the past, but we got some real extreme readings here, no question about it.
And also, let me just point out to listeners that the commercials generally don't feel that kind of pain regardless. So if gold were to go up tremendously, these are not like speculators where they have to panic and be disorderly about how they get out of their positions. They can usually take the pain because they have unlimited backing, as you know, pretty much from the government, a blank check. And so then they can basically just wait for the enthusiasm and then try to crash it back down and cover that way. So it's a terrible game that they've been allowed to do and that they've been allowed to abuse for a long, long time. You have pointed this out for years. GATA has pointed this out for a long time, and it's almost unimaginable that this has been allowed to go on as long as it has.
I agree with everything you're saying, Eric. The only thing I will point out, it hasn't happened yet, but, the commercials are just not invincible. When you look at, what we've seen in the last